It's time for our 360 Spotlight. She's back. Rebecca Walser is here, president of Walser Wealth Management, to take us through her thoughts on the big sell-off, which she was talking about, a big sell-off. We'll get to that, and some stock picks for your portfolio. Good to see you.
Good to see you, Nicole.
So this week I pinned something that you and I had discussed last year in the fourth quarter. You were saying 30% sell-off, 30% sell-off, particularly in the AI names. You were expecting a slowdown. Was that it? Was that sort of what you were thinking?
Yeah, I mean, I think Monday was a lot more price action focused around what was going on with DeepSeek, and I don't think that is exactly what I was talking about. But what we have, and to explain it as simply as possible, is anytime there's new technology, and I'll give credit to Alan Greenspan, because that's the .com. Anytime you have a new frontier of technology, Nicole, I call it irrational exuberance, because before monetization, when you see it take off and be capitalized with really high price earnings ratios because it's not monetized yet, then you know you have irrational exuberance. And so my whole point is that the runway is here for AI, robotics, quantum computing, and blockchain. However, it's not yet monetized. It's still in the R&D and implementation phase. And so until it gets monetized, we will continue to see volatility and we will continue to see pullbacks.
So a day like what we saw on Monday, where you saw NVIDIA down, Vistra was down over 20%. So many names were down over, 15%, 20%. Do we see a day like that again, or do you say those are the buying opportunities?
I mean, those are buying opportunities. I think that the equity market right now is overbought in general. I don't really support the PE ratios that we have based on the fact that a lot has not yet been monetized. Once we're monetized, we're off to the races. There is going to be a change, a sea change of the entire way we do everything. So once we're at monetization stage, the PE I'm not concerned about. But as we're getting there, that is a concern. So, the thing is that, yes, little things like this can come out, Nicole, whether it be in Taiwan with chips or it be in China with AI development that doesn't require all these expensive, whatever it is, that shows you how fragile this frontier is. That's what people need to understand. It's still not monetized, and so it's fragile.
So with an equity market that's overbought, and I guess you're referring to not just the NASDAQ, you're talking about tech stocks, but the S&P as well.
Absolutely, yeah.
So what is someone to do if you're saying it's overbought? I mean, should they just keep buying on dips, or what do they do in 2025? And then I want to get to the stock picks.
Yeah, I mean, it depends on where you're at as an investor, right? If you want short-term price action because you're just really looking to be aggressive and get some, there's growth, there's movement, there's stuff that can be traded and actually you can make money, and that's price action. If you want something that's more long-term and you're not really concerned about the volatility, buy into NVIDIA, buy into some of these AI companies, but know that, hey, I'm not going to look at this for 5-10 years. It's going to be a long-term runway. And if you want more results sooner, if you're more income based, then you're still going to have to look at your value stocks that are not a part of NASDAQ.
Right. I get what you're saying. So you have a few names you brought to us. Snap is on there. Why did Snap jump out at you?
We think that Snap could actually really benefit from the TikTok situation, with this IT kind of situation going with TikTok. Snap has like 443 million active daily users, whereas obviously TikTok has 1.5 billion. So if TikTok doesn't get bought, we think Snap has a great upside potential, but we also do think that if there's any kind of consolidation, if another IT company buys TikTok, then we do still see Snap having a competitive edge because of where they are.
I mean, this was $17 almost a year ago. Now it's $11.
Exactly, and it's off. It's off of its.
The upside potential. I mean, do you think it can go back to the highs?
I mean, it's got 9% growth year over year, and so we think that it is in a good position, and it is, it's really off of its all-time high. Revenue 1.55 billion in the quarter, so I think it's a potential good buy.
All right, let's take a look at Fortinet. Also here, this name hit a recent high of 101. 1 year, well, I'll do 6 months. It's up 72% in 6 months. Some of your thoughts on Fortinet?
It's some of the cheapest cybersecurity that has integrated AI, Nicole. So if you're looking for, hey, what are the ancillaries to AI as it becomes monetized and usable, then you're going to look at companies, cybersecurity companies that are really bringing in AI to the front. And we're starting to see a lot of enterprise development of Fortinet because of their integration of AI. So they're kind of on the forefront of that, and that's why we're picking them.
Yeah, and it's interesting because this was really exciting. I'm actually pulling out to see a 3-year chart. Yeah, you know what? It's still, the 101 is still the highest in 3 years.
Exactly.
Because it was so in favor, and then it sort of really crashed down, and everybody was scratching their heads, but it's back.
Yeah.
And it's definitely a winner and has had some great momentum.
Yep.
Last but not least, you have Lockheed Martin,
yes,
aerospace and defense. What's the thinking behind this?
So Lockheed took a $1.7 billion write-off in 2024 that was unexpected. It hadn't been expected to be written down that fast, so they really came off of their high. They missed EPS in a big way, so this is a big dip buying opportunity. Literally, they are 26% off their all-time high, 9% off of their most recent high. They have a PE of 18, so we still think that the PE is reasonable. And their dividend, Nicole, even with the write-down that was unexpected to take in 2024, they're still maintaining a $3.30 dividend a quarter. So if you're looking for value, long-term growth, and obviously with the Republican administration and this being a defensive sector area, we feel that Lockheed is going to do well in the next 4.
So when we think about the S&P, just a sort of final thought, you know, we had 2 20% years. No one could have anticipated that.
Yeah.
Now what? Do you think we could have a winning year on Wall Street? I know there's uncertainty with geopolitical events, tariffs. No one knows what happens there. The S&P for the year, do you think it's a win?
Gosh, it's so hard. I would say that with the Trump 2.0, someone who now understands how the sausage is made and doesn't have to get reelected. So this is a very different administration than we saw the first time around. Very, very big into deregulation, a big projection of M&A activity, Nicole, as you know, for 2025. However, all of that being said, I can tell you there's a lot of bad actors in the world that are really anti and this administration and anti-American dominance of AI, cyber, everything. So I think China's going to give us a really, really push this year, and we will see. We will see if we get this market is priced to perfection. Anything that does not come out perfect is going to be disruptive, and you should expect disruption just like we had Monday. That's what I think this is the note. Hey, we can win, but we are very fragile. So any disruption, and watch out.
All right, Rebecca Walser, great to see you. Walser Wealth
Nicole.
Management. Thank you, Rebecca.